They're one Paul here. Today I'm going to be going over a strategy on how to look at gold and look at the charts of gold and kind of increase your chances. This is going over a strategy that I've talked about the last couple of videos with the other assets. Today if you understand gold, you can. Now, gold is very volatile. It's it's the top assets out there. So when it's moving, it moves very fast because there's a lot of volume that goes into it. Gold and like the US 30, the Dow Jones is probably the most volatile assets. But if you can understand their direction, you can end up making a lot. At the same time, you could lose a lot. So whatever the strategy is, you need to have it. If you do want to tackle the Dow Jones or gold, you do have to really understand direction. And what I'm going to show you today it helps kind of narrow it down and find all the right moments. It's good for scalping. Basically, you can do this on like a 15-minute to get in and out. It's what I recommend, but this strategy, you can use it for whatever time frame you want. But the longer you go out in the time frame, the more you're going to risk for it going the other way and going against you. But anyway, let me show you how to set this up for gold. And you're going to need the MACD and you're going to need the linear line strategy. And I'll show you how to kind of spot the best moments to get in for trades. Okay, so the first thing you want to do is you want to load up with the indicators. For this strategy, I have the linear line strategy and MACD. So basically, to get the linear line, you just have to go and search for linear regression. That's the top one here. It's going to be linear regression candles. And once you get that, you want to hide your regular candles, and then it makes everything more. It doesn't make anything as choppy. You can kind of see the clear direction a lot more clearer with this. Why don't you remove your regular candles? And the next thing you'll need your MACD, and that's really all you need for this to work. The next thing you want to do is you want to get a good idea of the overall market and where it's going. So you got to look at a longer time frame, 6 hour or the day. You got to overall see where the overall direction is going. We look at gold right now on a 6 hour. We can see that it has been going up, but in the last 6 hours, it's more of an indecision candle. So it could go either way because there's equal amount of buyers and equal amount of, pretty close, equal amount of buyers and sellers on each end. So it could go either way. So if you don't see anything on the 6 hour, definitely go to your hour. And your hour is basically the same thing. You have a lot of indecision candles right now. But for the sake of this video, we're just going to stick to a direction. And we're going to find it. So let's just go with the direction of up, because it seems like it's had more of that in the past. But basically, you want to establish a direction. And how you find that is you want to make sure you find a full body candle. That all these candles with just wick at the top and bottom, it's a bunch of indecision, and the market really is struggling at that point. When you find a full body candle, it means there's solid direction happening. So let's focus on up right now. So what do you want to do when you find direction? You want to go to a smaller time frame. So right now, what we want to look for is we want to look for the moment when it crosses. So take a moment and look at the MACD. There's 3 moments of getting in trades with the MACD. There's when the lines are above it, which is bullish. There's lines when the lines are below it, it's bearish. And then when it's going through it, either going through it up or going through it down. So those are the moments of getting into trades. So what you want to look for is the moment when that's happening. So right here you see the price of gold, and it's crossing, the MACD is crossing down. This is a moment to get in trade because you do see full body candles. So you can get a trade like this, but it can it can go either way, but I like, when it's bullish, I like it being up here versus being down here. But if we came in on this trade, we could have come in right here where it crossed on the MACD, and we could have just rode this out. So from there to there, this is a 9,000 pip move. So use your lot size accordingly. So in this scenario right here, we see that the lines are below the histogram, and it is a bearish. It is signaling a bearish because you do see a lot of full body candles here as well. So you can ride this out here to here, and you would have made about 11,000 pip move there. So when the lines are down below, if it's below the histogram, I focus on downtrend. I don't necessarily focus on uptrend. I try to go with the trend. So right here, it's kind of going against the trend right here. I probably wouldn't have paid attention to that, but it seems to be doing the opposite, because right here you see it's above the histogram, and then it goes down. So what I like focusing on is a cross up with the histogram and a cross down with the histogram. That's what I look for, and it usually brings in some pretty good results. So right here you see a cross up, and it's going through the histogram. So you ride this here, and you could get some pretty good profit right there. This is a 16,000 pip move in 3 hours. So there's a lot of money that goes in and out of gold. So if you're able to pinpoint the exact direction that it's going to happen, you can end up making a lot of money. So we see actually right here that it's crossing down. It's up, but it's crossing down. So you get in right here, and you also see that with the linear line. You write it out like here to here. This is 3 hours and 45 minutes, and this is a 6,000 pip move. So here's an example of what I really look for when I'm trading. The lines are above the histogram, and you see it crossing up. So this is a move. You also see full body candles. So right about here, I would have ride this out from here to here, and this is a 17,000 pip move. Now this is a bunch of consolidation right here. You can definitely see with looking at the histogram that it's very weak at that moment. When the histogram is weak, you can tell that it's consolidating. So we want to find the next signal here. And remember, each time this is happening, you have to identify the overall trend. So let's just do this a couple more times, and I think you guys get the general idea. Here's a downtrend when it's crossing up. You could get in this trade, but this would be technically going against the trend. But, if you want to go against the trend, you're going to go against the trend, but I always like going with the trend. But anyway, if you ride this out here to here, this is 9 hours, and this is a 12,000 pip move. So right here, we see it crossing up here at the top. Right here, it's crossing somewhere up here. Right about here, it's crossing. And you see that in the candles because you see full body candles, so you know it's a pretty good trade. You ride this out. This is a 31,000 pip move in under about 4 hours. So use your lot size accordingly. Let's just do this a couple more times, and then I think you guys get the general idea. It's crossing down right here, but this is still going against the trend. I personally don't like these kind of moves, but it's crossing down. It's kind of fluctuating right here. But anyway, if you did choose to ride this one out, you could ride it to the bottom, right about here. It's a 13,000, almost a 14,000 pip move. And then with this strategy, you're going to find big pumps and small pumps. It all depends on what it's doing. And you see it crossing right here. Here's a small one. You ride this up here to the top. And this is a 12,000 pip move. So that's about it. I think you guys get the general idea. You have to identify the overall trend looking at the day or the 6 hour. And once you have identified the trend, that's the trend you focus on. When you go down to a smaller time frame, you go down to a 15-minute, a 5-minute, whichever time frame you want to scalp it. But you have to see that with the MACD, and you basically go with the trend when it crosses. So basically, when you see it happen on the MACD, that's when you enter. So, I try to look for it. When the lines are up here, this is bullish. When the lines are down here, it's bearish. So if the trend is bearish, I try to focus on crosses down. If it's up here, I try to focus on crosses up. But a lot of the times that does the reverse on here, and it's basically up to personal preference if you want to go against the trend. But anyway, that's how I do it with trading with gold. It's very, very effective doing it this way. But anyway, that's how you really can go with the trend. So keep in mind that gold is a very volatile asset. It's the top asset out there in the world. So the volatility, it's always moving. It's very volatile when it's moving. So you just got to keep that in mind. It could go against you at any moment. But this strategy actually helps find all the really good moments. To kind of narrows it down, and you really go with the trend when you apply this strategy. It works really well. It works really the best, I think, at smaller time frames, because you want to basically just get in and out. You don't want to do this on a longer time frame like the hour, because it could go against you. But anyway, if you guys like this strategy, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.